Thank you for joining me today for Real Estate, Religion, and You. My name is Dr. Sylvia Black, licensed real estate broker with affordable homes and apartments. And I'm licensed to preach and I'm ordained as a minister. And I have my master's degree in sacred theological divinity. And I'd like to thank you for joining me today for Real Estate, Religion, and You. Thank you again. This show airs every Wednesday right here on Time on the Public Access TV Channel 20. Wednesday 6:30 to 7 and Saturdays from 12:30 to 1 in the afternoon. You can hit me up on YouTube at SBlack3001. Hit me up on Facebook at Dr. Sylvia Black. You can visit my YouTube address at SBlack3001. And again, I want to thank you for joining me today for Real Estate, Religion, and You. Today I'd like to talk to you about a new book that I am writing, and I'm actually practically complete. And this book is going to be talking about from the financial perspective. We'll talk about a little bit about real estate and the financial industry for a while. And this is the DVD of what the cover is going to look like. And it's entitled, How to Keep Banks from Sucking Your Money Dry. And this is what the cover is going to look like. This is the DVD. That's the back of the DVD. How to Keep Banks from Sucking Your Money Dry. Okay, and it basically talks about about the fees that banks charge and how to avoid paying some of them, how to be a smart person in terms of your money. Income taxes coming along, you don't want to be foolish. And I know Black Friday just passed, so I know a lot of people will probably spend a lot of money, hopefully not foolishly. But today we're going to talk about as much of it as we can today in this segment, and we'll probably continue for the next couple of weeks talking about how to keep banks from sucking your money dry. And basically we'll be talking about overdraft fees. Now, banks don't loan you money because you're a nice person, okay? Banks loan you money pretty much to make money. The banking industry is a fee-generated business, and banks predominantly make their monies off of the fees and the interest that they charge to you and I, okay? Every financial institution, however, is different, and each financial institution has different qualifying criteria. One bank may require you to have a high credit score in order to qualify for a loan, while yet another bank may not require you to have such a high credit score at all in order to qualify for a loan. Banking and financial industries have changed over the course of the last 30 or so years. Some banks, they don't offer a high interest rate like they used to, such as 15% interest on your money like they used to. They charge higher overdraft fees, and it seems as if they're sucking us dry of our money. And I'm going to talk about overdraft and exactly what that is. I had an account with a savings bank, and it was bought out by another bank, which I consider commercial. Okay? I can't compete with those fees that these commercial banks charge. Some charge a higher interest rate than others. Some have different types of accounts, but not every bank is the same. And that's why I try to tell my customers as a real estate broker, when you come to me to buy a house, that when you're trying to get approved for a loan, I encourage you, my customers, to take at least 24 hours to think about what it is that you're applying for, no matter how good the deal sounds or how much in need you are of it. I also encourage my customers, like I said, to take 24 hours to think about it so that you can determine and talk it over with the family in terms of what's right for you. Okay? I've always been told if it seems like it's too good to be true, more than likely it is. Okay? Now, I used to try to balance my money down to the penny. I never could balance my money down to the penny, and I still can't now. And I didn't understand how my money was being processed. And that was where it really got confusing for me. Also, banks have also changed in the way they process deposits. Again, not every bank is the same. You know, some banks are different than others. Okay? As a real estate broker, selling houses is contingent on finding financial products that will fit the buyer. Okay? As a loan officer, that I used to be a loan officer for a few years, and that's what I used to do. I researched the market and found products that would match my buyer's need. And even today, when you're seeking financing and desiring to open up an account, okay, it's extremely important to understand how much is this going to cost me. I think that should be the underlying question in your mind when you go to the bank. You got to remember, like the saying used to say, they have lawyers working hard on their side, and why shouldn't you? And I'm not blaming it entirely on the banks. It's not all the bank's fault, because the bank has a job to do. As a business owner, I know we have to make money in order to be able to sustain the business. Money is the lifeblood of a business, just like money is the lifeblood of a household. Okay? Without money, or without the adequate amount of money, your business could inevitably not succeed. And the same goes true with your household. Now, savings and loans have taken a dive. There used to be banks that used to call themselves savings banks, and then there used to be banks that called themselves commercial banks. Now, they still may be called that to the governing agency that holds their license, but they don't tell you and I that they're a commercial or savings bank. Savings banks, they always say savings banks are for people, commercial banks are for businesses. And this is true because a commercial bank usually has higher rates, higher fees, higher deposit balance requirements. Now, I can agree that a lot of banks that don't call themselves commercial banks anymore, that do practice these higher fees, inevitably will not tell you that they're a commercial bank, but yet they will charge you these fees. Now, whenever you go into a bank and you say, I want to open up an account, or whenever somebody's enticing you to open up an account, tell them, say, yeah, I'm very interested in that, but I'd like to take it home first. Because you're going to ask them, you can say bluntly, how much is it going to cost me? Because what I used to do as a helpful aid, before I researched the market, because when I took the class to become a sales agent, and then took my next class to become a broker, I had a lot of financial training in those classes. So what I would do as a precautionary measure, I would actually accompany my buyer to the bank, because I knew what questions to ask the bank. And that was very intimidating to some of the bankers, because a lot of them were loan officers and they were rookies and they didn't know what I was talking about, or what kind of mortgage that I was trying to get this specific type of mortgage for my client, and they had no idea what I was talking about. So, needless to say, we have to go running from bank to bank. The first thing the bank wants to do is run your credit score. As I said, the banks are in business to make money. Okay, they're in, and we're in business to make money too, right? We want to make money. There's nothing wrong with that. And like I said, it's not entirely the bank's fault. They put it out there. I think what it is the bank says, here's some rope, and now either you hang yourself with it, or, you could tie up your garbage with it. One or the other. Now, savings banks have taken a dive over the years, okay? And the several institutions were formulated due to help people like you and me, first-time homeowners, or just homeowners in general, to keep our home from being taken away from us. There's an organization called, and these are government agencies that, I can talk in detail about, but I don't want to spend so much time. I can say the Federal Savings and Loan Insurance Corporation is a federal government agency that insures savings and loan accounts in the same way the Federal Deposit Insurance Company insures commercial bank accounts. Okay? If your bank account is insured by FDIC, you can pretty much be sure that that's a commercial bank. If your bank account is insured by FSLIC, then you can be sure that your bank is a savings bank. That's how you can tell whether it's a commercial bank or a savings bank. Okay? Now, there were several, the Government National Mortgage Agency, which is also called Ginnie Mae, was established in the United States in 1968 to promote home ownership. As a wholly owned government corporation within the Department of Housing and Urban Development, Ginnie Mae's mission is to expand affordable housing finance in America by linking domestic and global capital to the nation's housing finance markets, providing liquidity to federal-sponsored mortgage lending programs. The Ginnie Mae also guarantees. The Ginnie Mae guarantee also allows mortgage lenders to obtain a better price for their loans in the capital market. Lenders then can use the proceeds to make new mortgage loans again available to consumers. This also helps to lower financing costs and create opportunity for substantiable affordable housing and families seeking home ownership. Now, FHLMC is also known as the Federal Home Loan Mortgage Corporation, also known as Freddie Mac. Freddie Mac and Ginnie Mae, their cousins, is a public government-sponsored enterprise headquartered in Tyson Corners, CDB, in Unincorporated Fairfax County, Virginia. Okay, the FSLMC, okay, was created in 1970, okay, to expand the secondary market for mortgages in the U.S. Okay, FNMA, also known as Fannie Mae, commonly known as Fannie Mae, was founded in 1938, during the Great Depression as part of the New Deal. It's a government-sponsored enterprise and has been a publicly traded company since 1968. Okay, now bank fees are assessed to customers for various services as penalties. There are unauthorized overdraft fees, ATM usage fees, and fees for having an account balance under a required amount. And I'm talking about my book that's going to be coming out, How to Keep Banks from Sucking Your Money Dry, which will be available on Amazon.com. Okay. Now, bank fees are assessed to customers for various services as penalties. Okay, they are unauthorized overdraft fees, or you could be penalized for not keeping the required balance requirement that the bank talks about. Some banks charge a fee for using tellers in an effort to encourage customers to use the automated services. Some bank fees charge if you call up the customer service department too often. Okay, there's a fee for everything that you do. The fees have come in for criticism and excessive from consumer advocates. They have also targeted bank practices that maximize the assessment of fees, and fees that can add up to many times the amount of small transactions. For example, in some cases, I would say in the state of New York, I think the fees are like $39 for an overdraft fee. Let me just summarize, basically just give you an idea of what I'm talking about here. What overdraft is it's a penalty for not meeting the bank's requirement. Okay? Now, overdraft can be a negative and a positive. Now, you have overdraft fees, then you have overdraft protection. Okay? And then you have what's called insufficient funds. Okay? Let's say you write a check, you have a checking account. You don't have enough money in your checking account, and you don't have overdraft protection, your check is going to bounce. When your check bounces, the bank that you wrote the check against is going to charge you a fee. In addition to that, the person who's supposed to get the funds, they're going to also charge you a fee. You're going to get hit double fees, and the bills are not going to get paid. On the other hand, if you have overdraft protection, and there's several types of overdraft protection, and what I'm talking about is a standard opt-in overdraft protection, not a line of credit. Okay? Standard overdraft protection is where you opt in and you use the bank's money to purchase transactions for ATM, debit, and everyday transactions. Okay? You write a check and you don't have enough money in your account to pay for it. Overdraft kicks in and pays the bill. However, you're going to pay a fee for that overdraft for the use of the bank's money. Okay? But the bill will get paid and you'll only get hit once for a fee. So, some people go crazy on it though. That's why I said it's not entirely the bank's fault. Some people actually go crazy. You know, you say, oh wow, you know, you swipe the card, you go get a $5 video. Let me see if I have enough money in there. Then you look, oh wow, I got the video. Okay, let me go and see if I can get this. Let me go get that. Let's say, for example, you take 5 transactions. Now, you're down to well, let's say $20 in your account. You go get a couple of purchases, now you're depleted. Now you're down to, let's say 20, you go buy something for $25. You use $5 of the bank's money. For the $5 that you use of the bank's money, you're going to pay $39 for that. Depending on what state you're in, you could pay a smaller amount, but I would say they average around $27 across the board. Now, there is a standard in overdraft fees, and I believe that there was a lawsuit with one bank who had to refund overdraft fees. All you had to do was contact this particular law firm and let them know that you would charge the overdraft fee. I think it was between 2006 and 2010, and you would automatically be refunded certain overdraft fees. Now, I don't know the details. I don't want to talk about that. I don't have that much time, but it's in my book. How to Keep Banks from Sucking Your Money Dry, available on Amazon.com. It will be available on Amazon.com. Now, let's say you $5 of the bank's money you purchased. Now you owe the bank $39 plus $5. Let's say 5 more transactions you do, and let's make it easy, $50 each transaction. 5 transactions are $50, right? All of that use the bank's money. 5 times 40, let's just round it off, is $200, right? So now you're going to be paying the bank back $200. When that next dollar hits your bank account, it's coming out of there. Okay? So you're going to pay $200 back to the bank, and that's for the use of the bank's money. In addition to that, you're going to pay them back that $200 for the transaction itself. Okay, so you're paying back the $39 or the $40 for each for overdraft fee, because that's your protection that you got. The protection is that the bill gets paid, or that the dinner that you go out and you swipe your card, you don't have to get embarrassed. You go partying on the weekend and you can spend and you can splurge, but come Monday morning you're going to pay for it. Okay, and that's the bottom line of that. Okay, so you're paying $200 for the fees, and then you're also going to pay, hypothetically, another $200 for your transactions. I consider it like a payday loan, because a payday loan is like when you go to borrow money, you just got paid, but you're borrowing this money based on when you get paid the next time, right? And I think that's sort of ironic, because, when you do a payday loan, you're going to have to pay that money back with your next paycheck, right? So when your next paycheck comes, let's say you done borrowed your whole paycheck. You got, your paycheck, and now you done borrowed practically your whole paycheck. So your next check in 2 weeks, you're going to have to pay back that money that you borrowed, which constitutes your whole paycheck. Plus you're going to owe interest, which you won't be able to pay this week. So you're not going to have any money now for the next 2 weeks. Then 2 more weeks now, which is a month from the time that you actually borrowed the money in the first place. Now you got to pay back whatever interest rate they charge, and that could constitute, let's say, a third of your paycheck. So now you've actually had to double your check. You had to buy something, but now you got to go a whole month. How you going to survive a whole month without any money? 2 weeks is hard enough to go, and then you got to try to struggle for an additional 2 weeks without having any money. It's sort of like that. It's sort of like a payday loan. Okay, when you borrow money from the bank, when you write a check or whatever, or you swipe your debit card and you don't have enough money in there to cover it, the bank will cover that. Okay, if you have overdraft protection, if you opted in. And even in some cases, when you don't opt in for overdraft protection, the bank will still, at their discretion, pay your ATM debits and everyday debit, ATM and your check, everyday transactions for you. Okay, that's only in some cases, but it's at the bank's discretion, and it has to be paid back with the next money. So if you have direct deposit and that money comes in that bank, that money is coming out of that. So let's say you get paid $1,000 every 2 weeks. You done got paid $1,000. You got overdraft protection. You done went crazy. Christmas. Thanksgiving is here. You went Black Friday. You went shopping. You pull up your house with stuff. You got it at a good price though, but now you ain't got no money, and you use some of the bank's money to get it. So now you bought all of these items now, and now you done spent. Just say you paid your $1,000, you paid your bills, and now you done spent $1,000. Okay, let's say now because most of that money was the bank's money, right? So now your next paycheck you only get $1,000. So mostly all of that money that you're gonna get in 2 weeks is going back to the bank. You're gonna have to pay that off the top. Okay, and now you gotta wait another 2 weeks before you get paid again. So let's hope you don't have any bills or anything. You're gonna have to really pinch pennies for the next couple of weeks before you're able to actually survive. And I say it's not entirely the bank's fault because the bank puts it out there and gives us the ability to be able to have the protection available. But what I consider it as just basically, the ability to use that if you really need it. It's only for emergencies, like when your rent is due and you don't have enough money to pay it and your landlord is knocking on your door threatening to file eviction. You pay it, so you use that money. I'll pay you the $39 for the privilege of getting my rent paid. I'll pay you $39 if I have to wait and pay it to keep my lights and gas on. If I have a car note or whatever to keep my car from, because you got some people that'll be like, I need my check to clear, I need my money right away, right now, otherwise, there are ways of going about it. You can work out a payment arrangement with them. Not everybody likes to do that, but sometimes it can be done. But the bottom line is that we need to be smart about our money. We need to be educated, and that's what this book is basically talking about. How to keep banks from sucking your money dry. And it's not all banks that'll do that. Like I said, if your bank is insured by FDIC, then you can be sure that it's a commercial bank. And commercial banks cater to businesses. They have higher interest rates. They have higher, so when you're opening up an account, when the representative is enticing you, because don't forget now, they're making a commission off of selling you that account. So regardless of whether you know what's going on or not, you need to be educated and informed. And I always, will try to tell my people that. Now, overdraft occurs when money is withdrawn from the bank, from your bank account, and the available balance goes below zero. In this situation, the account is said to be overdrawn. If there is a prior agreement with the account provider for an overdraft, and the amount overdrawn is within the authorized overdraft limit, then interest is normally charged at an agreed rate. If your negative balance exceeds the agreed term, then additional fees may be charged at higher rates and may apply. Now, there's some ways that you can avoid paying the higher rate, which you can pay a lower fee, by linking your savings account to your checking account. Okay, and this you simply call the bank up and you tell them, I want to link my savings account to my checking account, and you walk into the branch and you tell them that. This way, when you write a check against your checking account and you don't have enough money in there, it'll pull from your savings account. Okay, there's a smaller fee. I don't know, somewhere in the neighborhood of $8 to $15, depending on the institution and depending on the state that you live in, because those fees vary from state to state. Okay, so now you have, your $8 to $12, whatever, as opposed to $39. Now, say you're making $1,000 every 2 weeks. That's possibly somewhere in the neighborhood of almost about $100 a day. That's before taxes. After taxes, I can almost assure you that you're probably bringing home about $70, $75. Half of that is going to the bank in overdraft fees. Now, you busting your behind, working all day long, whatever kind of occupation it is that you're doing, you're working hard at it. You mean to tell me you're going to work hard at your money just so that you can give it right back to the bank? Right back to the financial institution that is supposed to be protecting your money? Banks, that's not their, like I said, it's not their fault. They say, here's a rope. I'm going to let's see if you're going to hang yourself with it or not. Because we're going to get our money. You know what I mean? And looking at it from a business perspective, I would have to say, are they justified or not? Are they supposed to tell and inform? Yes, they're supposed to do that. There are code of ethics that are involved. But if I open up an account for you and I don't tell you all of the ins and outs about it, but I give you a disclosure for you and you sign it, now I've done my job. Who's going to sit there and read that fine print right there while you're sitting there? No, you take it home and you read it. You say, look, I'd like to look it over for a little while. But the bottom line is, how much is it going to cost me? What are some of the requirements that you require? And I've always been like that. Ever since I got my license as a broker some odd years ago, a little years ago. I've always been like that. And I always went to my customer and I said, look, because in order to sell a house, it's based on the financial product that's offered. It's very difficult to try to sell a house without, having the money available. So that's why I researched and I wrote a couple of books on that. Where there's some free money at in form of grants, loans, down payment and closing cost assistance, purchase subsidies. All of that I found out about, so that this helps me to sell my house. But also as a loan officer, I enjoy doing that. I work as a loan officer for a while, in New York City, and I enjoy doing that because, you're helping people achieve their financial goal. And it's a wonderful thing to me. I love doing that because I like helping people. And I like, say I'm helping you achieve your goal. But the bottom line is that I have to educate you before I can accommodate you. I have to let what it is that you're doing wrong. Before I can, pretty much help you. And so that's the way I'm as a real estate broker. You know, and I'm going to pick up talking about this again next week. We're going to talk about how to keep banks from sucking your money dry. And it's basically, I talk a lot about the overdraft fees, about the fees and the interest rates that the banks charge. And I'm going to get some more into detail about that next time when we meet. But you can view on my YouTube address at sblack3001. You'll be able to see all the videos there way before I post on the TV show. Okay? And I'm going to pick up from the history of the banking institution. Actually, the history of when the first overdraft was charged. You ever know the dollar store when you go into the dollar? And I'm guilty of it too, because when I go in there, I have my mindset. I said, okay, I'm only going to get like 5 things. This is what I need. I'm going in the dollar store for that. And then I start looking around and be like, oh man, look at that. It's only $1. Boom, bam. Next thing you know, I done spent $40, $50 in the dollar store. And this one trip that I was supposed to only spend $5. I go in there for one item to the dollar. I said, okay, I'm just going to buy one thing. And I go in there and buy stuff that I don't even need sometimes and whatnot, that I end up keeping because I'm too embarrassed to take it back because I paid $1 for it and I ain't had no business buying it in the first place. Well, they sort of they nickel and dime you. They make money because they charge $1 for all of these products. How can they do that? You know what I mean? But you got to remember the denomination is different in states. And I can talk about foreign currency at some other point. But as a real estate broker, I've been a real estate broker longer than I've been, pretty much writing my religious books. So I know this pretty much like the back of my hand, and I will start giving some workshops come the 1st of 2016 on some real estate workshops and when I talk about real estate workshops and about how to buy houses, I'm going to be talking about where to get the money from because that's an important factor. If you don't know where to get the money from, you're not going to be able to buy the house. The money is like I said, the money is the lifeblood of any endeavor that you choose to get involved in. If you cannot find the money to finance the situation, then you're not going to be able to get the house. On the other hand, though, most people, when you get your income tax now, you can claim up to 3 children, maybe even 4. And now the 10 grand is the average amount of money that you can get on income tax day. The first thing you should do is put some of that money aside because you can buy a house with cash now. Call me up at 716-602-7213 and I'll hook a sister and a brother up. I'll show you how you can buy yourself a nice house for cheap. Okay? And don't be spending your money at every corner store and be looking unbelievable. Okay? And whatnot, Okay? So I'll holler at a sister. I'm going to see you again next week. Okay? Stop making those Arabs and those Chinese people rich. You know what I mean? Save that money. I can understand if you need to go to the store and whatnot. Go to the supermarket. Don't go to the local store. They charge more. Anyway, we're going to talk more about how to keep banks from sucking your money dry next week. Holla at the sister. How to keep banks from sucking your money dry.